Hi, I'm Dad the Engineer. Videos about Amazon's Vine program are pretty specialized in the first place. Posting a video about the tax implications of Vine is an even smaller target. So what could I possibly do to narrow my audience even more? A follow-up video to the original Vine tax video, of course. Don't worry, I'll be quick. There's lively debate about claiming your Vine product value as hobby or business income. It's been going on for as long as Vine has been a thing. If you look a little, there are even people that claim that you can tell the IRS that you don't actually get paid. While technically true, that ignores the fact that compensation can come in many forms, including the value of the items that you receive to review. It's no different than having to pay tax on the value of a car that you win in a lottery. As far as the discussion about what type of income you can classify Vine product value as goes, I would just tell you this. Yes, there are people who characterize some, or all, of their Vine product value as hobby income. Yes, there are those who characterize some, or all, of their Vine product value as business income. There are even those who restate the value of goods to be some lower value. There is no guarantee any of that will be successful for you. Here's why. IRS reporting requirements have gone from largely manual to massively automated, and it's happened in the last couple decades. It's to the point now where most taxpayers could actually have their tax burden calculated by the IRS, assuming that you wanted to use the standard deduction. That's because almost every document that's associated with your Social Security number or federal tax ID is electronically filed. That includes the 1099 NEC that Amazon files on your behalf. If you claim that the 1099 NEC values are incorrect, for example because you want to substitute your own product fair market values for Amazon's estimated tax values, that is going to create a mismatch. Amazon is not correcting the values on the 1099 NEC based on your calculations, so this mismatch will get flagged by the IRS. Expect them, at any point in the next several years, to tell you that you owe the tax on the difference. When they do, you can dispute the amount, plus any penalties and interest. Assuming that you or your paid tax preparer are able to show how the difference was calculated, you may be okay. Then again, whomever is reviewing the discrepancy may be unmoved by your argument. In a dispute or audit, the average taxpayer comports themselves as well as a sovereign citizen does in court. That is to say, poorly. It's not that you can't do it yourself, but if you're going to test these waters, you will want a CPA calculating and defending this kind of work. I humbly submit that checking the upsell checkbox on H&R Block Online may not give you the protection that you might want. Ultimately, you need to understand that this is significantly more niche than manual cost-basis worksheet keeping on asset transactions. So evaluation of your specific case isn't going to necessarily have an outcome consistent with others like it. One last thing. Seeking out options for reducing your tax burden is a normal thing to do. But don't fool yourself. It's not research or an exercise in critical thinking if you stop as soon as you find something that sounds good to you. At best, that's confirmation bias. At worst, it's magical thinking. To summarize, this is potentially a large instance of FA, followed by delayed FO. The best case is that you perform your bookkeeping wizardry and years later nobody ever asks any questions. Expect that to be the outlier cases, though, and that most of these attempts will get flagged, potentially years later, and in that instance you'll want a CPA doing their best to explain their homework. Citing Reddit experts is not going to sway anyone. It's worth mentioning that the tools to spot these anomalies in the data are getting vastly better at an impressive rate. Knowing that, you should do a little risk analysis to determine if trying to save some money right now is worth the exposure. If you still think you want to give it a go, I would treat any money saved as an accrual against a future IRS levy. If you found this video to be helpful and would like to see more like it, please like and subscribe. I'm just getting this thing started and I could really use your help. If you would like to contribute some feedback, please engage with me in the comments below. Thanks and have an awesome day.